Assalamualaikum and very good morning. This week we will discuss another topic for this subject, which is analysis of a foreign financial statement. So the topic will be recorded in two parts, so that it's easier for you to refer to the video later on. Okay, so this is the learning objective for this topic. First, we will discuss what is a logical approach to analyze foreign financial statement. We also will discuss why is it difficult to undertake an international business strategy analysis. What are some steps to examine foreign accounting practices? How do cross-country variation in accounting measurement, disclosure practices, and auditing standards impact one's analysis of foreign financial statement? How can you cope with differences in national accounting measurement? What does international perspective analysis entail, and why is it difficult to perform in an international accounting? And lastly, what are some pitfalls to avoid when conducting cross-country ratio analysis? Okay. As we already discussed in the earlier of the chapter of this topic, we said that cross-border financial analysis involve multiple jurisdiction because when you are as we already learned that each country, they have their own legal system, they have their own culture and so on. So of course, when we do the cross-border financial analysis, when we are talking about cross-border financial analysis, we are talking about we analyze between in the international setting. Okay, so of course it will involve multiple jurisdiction. So an analyst, for example, when the analyst have to do the analysis, he or she may have occasion to study a company outside her home country or to compare companies from two or more countries. So since this is when we are comparing from two or more countries, of course it's in the international setting. Okay, of course the analyst will do the international analysis. So the analyst will what we call face the unique challenge. And sometimes some nation vary dramatically in their accounting and auditing practices, disclosure quality, legal and regulatory system, nature and extent of business risk, and modes of conducting business. So this variation means that analytical tools that are effective in one jurisdiction may be less so in another. So what is the approach? Even though we said, as I said just now, there are several analytical tools that being used by analysts, but in general there are four logical approach. So this is the logical approach, that the analysts do when the analysts try to analyzing foreign financial statement. First, of course, the analyst will undertake a business strategy analysis. Number two, the analyst will conduct an analysis of a firm financial reporting practices. Number three, the analyst will conduct a financial analysis using ratio and cash flow data. And lastly, the analyst will do a prospective analysis. So this is the four stages or logical approach that the analyst will do when they want to do the analyzing foreign financial statement. So when we refer to this stage just now, so this is number 1, 2, 3, 4. This one is this stage just now. Okay. So the question is, which stage is important? Is it the first stage, the second stage, third stage, or fourth stage? So the relative importance of each stage actually depends on the purpose of the analysis. Okay? The business analyst framework can be applied to many decision contexts, including security analysis, credit analysis, and merger and acquisition analysis. For example, when we are talking about, let's say we are talking about credit analysis. When we are talking about credit analysis, normally we will look more on the financial analysis and the prospective analysis. We didn't say that stage 1 and stage 2 is not important, but relatively stage 3 and stage 4 is very important. When we want to do the merger and acquisition, for example, of course, business strategy analysis is very important. So relatively, this first stage is very important. Okay. So the business analysis, okay, is an important step in financial statement analysis. Why it's important? Because we said it provides qualitative understanding of a company and its competitors in relation to its economic environment. So it will provide the information. So this will ensure that quantitative analysis is performed using a holistic perspective. So we are not only do the analysis on the quantitative side, but we also need the qualitative side. Okay. So by identifying the key profit drivers and business risks, business strategy analysis help the analyst makes realistic focus. Okay. So for the SOP, when we are talking about SOP, standard procedure for gathering information for business. So when we gather the information, okay, for business strategy analysis, normally it will include examine the annual report and other company publication. And we also normally interview the company staff, okay, analysts, financial analysts, and other financial professional. The use of additional information sources such as World Wide Web, okay, trade groups, competitor, reporters, okay, lobbyists, regulators, and financial press, of course, becoming more common right now. So right now, if the company want to do the analysis, it's not only depends on these two sources, but also another sources. Okay, but when the analysts gather the information from these sources, the analysts must ensure the analysts will evaluate the accuracy, reliability, and relevance of each type of this information. Okay, so you cannot say that, oh, the information from trade groups is very relevant without evaluate the relevancy of the information. Okay. So of course, the business strategy analysis is often complex and difficult in an international setting because of few factors, as we already learned in the earlier chapter. So the key profit drivers and type of business risk will be different among countries. Okay, so in understanding them, okay, can be daunting. Business and legal environment and corporate objective also will be very, okay, around the world. Okay, so many risks such as, so inventory risk is different. So many risks such as regulatory risk, you're talking about foreign exchange risk and credit risk, need to be evaluated and brought together currently. So need to be evaluated. And even though just now we are talking about there are information that must be gathered when you do the analysis, but some of the information sources may be limited or unreliable. In some countries, for example, source of information is very difficult. For example, it's categorized as confidential. It's not a public information. Okay, so for example, in Malaysia also, if you want to compare in Malaysia with in US, for example, it's the most of the data or the information in US, it's more easily gathered rather than in Malaysia. Okay, so for business strategy analysis is especially difficult in some country due to a lack of reliable information, and of course because of limited, just now we said. Okay, and this situation is actually, we can see become worse in many emerging economies. For example, I'm not sure, I think you are not born yet. For example, one reason that Mexican currency crisis in 1994 and in 1995, the Mexican crisis during that time is very bad. Okay, one of the reason is because the government concealed information about its shrinking foreign reserve and export money supply. Okay, so what happened is the information is concealed. Some country, they didn't conceal the information, but what they did, they will delay publishing statistic, or they will delay publishing the information when the information are unfavorable. Okay, or to some extent, some country, they even falsify the economic figures. Okay, so if we look on this exhibit 9.1, this is present a sampling of free available web resources, okay, which can be used to learn about country risk and travel condition. Okay, so if you look in this exhibit, so there are organization here. So this is the website address and the description. Okay, so this data normally is the analysts, they try to get the data, especially when about the country risk and travel condition, because they want to learn about the local business climates and how industry and company actually operate in that country. Okay. Okay, next is the accounting analyst. Okay, so what is the purpose of the accounting analyst? Accounting analyst is actually to assess the extent to which firm reported result reflect the economic reality. Okay, so the result, either the result reflect the economic reality. So the analyst then needs to evaluate the firm accounting policy and estimate and assess the nature and extent of firm accounting flexibility. Okay, so what is the accounting flexibility? So you remember when you do the when you learn the financial FRS, okay, MFRS, for some standard, okay, when we want to do the measurement or when we want to do the recognition, the standard give alternative. Okay, for example, when we are talking about inventory, okay, inventory can be using the FIFO, using the weighted average. So the alternative is given. So when the alternative is given, we call this is as a accounting flexibility. So what happened is the corporate manager is actually allowed to make accounting related judgment. Okay, Why? Because we said the corporate managers is the person that know most about their firm operation and financial condition. So the flexibility in financial reporting is very important because it allows manager to use accounting measurement that best reflect the company particular operating circumstances. Yeah, so it's allowed. However, sometimes when a choice is given, when the alternative is given, some manager may have incentive to distort operating reality by using their accounting discretion just now. So what happened is, the result, the profit, the reported profit will be distorted. Okay, one of the reason why the manager have incentive to manipulate the reporting profit is because normally the managerial performance or the manager performance is measured using the reported earnings. Okay, so this is the step in examining foreign accounting practices. First, the analysts have to identify what is the key accounting policy. Number 2, the analysts have to assess a firm accounting flexibility. The analysts have to evaluate the firm accounting strategy. The analysts have to evaluate the quality of its financial disclosure. Identify if there are any outliers in the reporting. And lastly, the analysts have to adjust for accounting measurement that distort the underlying economics of a firm transaction. So if there are, we said because of the judgment just now, okay, result that distort in the reporting, so the analysts have to adjust. Okay, so this is to illustrate this process. This process just now, how we illustrate, okay, so we illustrate using the real case. For example, we use the WorldCom. Okay. So, consider the accounting quality of WorldCom. So, what is the WorldCom? WorldCom is a large US company whose accounting policy resulted in a major Wall Street scandal. Yeah. So, informally, indicating the company on its faulty accounting practice, the following question might be asked. First, okay, we have to ask, how did WorldCom account for its major operating expenditure? What option does US GAAP allows for such expenditure? So this is, we are talking about accounting flexibility just now. Option, we are talking about option. So option is the accounting flexibility. Did WorldCom adopt an overly aggressive or conservative approach to accounting for this expenditure? So we want to check either they are manipulating because of the discretion just now, either they are manipulating the flexibility given. Did WorldCom capitalize an expenditure that should have been expensed to manage its earning? So these two, we want to check either the manipulation happen. Yeah. Did WorldCom disclose sufficient information for investor to undo the company aggressive accounting treatment? Yeah. And lastly, would reversal of WorldCom selective accounting posture have significant depressing effect on reported earnings? So this is the question that as analyst you should ask when you analyze the WorldCom financial statement. Okay. So what happened in this case, WorldCom is actually choose to capitalize what were in effect operating expenses. That thing is actually operating expenses. But WorldCom choose rather than to expense off, but WorldCom choose to capitalize that expenses. While of course this practice clearly violation of US GAAP, but management choose to conceal this information from investor by discuss operating expenses as capital expenditure. So what happened is the financial statement effect of capitalizing versus expenses just now, it's give a significant effect to the reported earnings, which involve approach of $2 billion. There are two major issues confront us doing the accounting analysis. Okay, when we analyze the international setting. First is cross-country variation in accounting measurement quality, disclose quality, and audit quality. And the second concern is the difficulty in obtaining information needed to conduct accounting analysis. Okay, so this is the WorldCom is a good example when you do the analysis. Okay, so how does the diversity in you already learned diversity in chapter 2, chapter 3. Okay, how does diversity in international accounting impact the financial statement analysis? We said the measurement differences within and between countries make performance comparison difficult. Why? It may relate to measurement option, okay, alternative. So this is because of the accounting flexibility just now. It may be due to difference in management discretion, may be due to difference in financial statement orientation, i.e. orientation based on creditors or orientation based on shareholders, or may relate to the objective of financial statements prepared, i.e. orientation towards more macro decision or micro decision. Okay, so for example, we are looking, for example, we are comparing Malaysia and China. Okay, Malaysia, we use the Anglo-Saxon model. So we look in China. Okay, so for financial reporting in China, they provide on how accounting measurement, disclosure, and audit quality can vary dramatically from accounting practices in Anglo-American countries. Okay, it's we said the differences between the China and those countries that using the Anglo-American models, it's very huge. Okay, so although if you read in the article, it said that China is already start to adopt the IFRS, okay, but the transition from a planned economy to a controlled market economy until recently, they did not have the financial reporting, and also the external auditing would not be familiar to the Western. It's very difficult to understand the financial statement and the auditing. Even the audit system itself is considered the new things in China. Okay, so the auditing provision is also very new in China. If you read the history of China, it's actually the basic accounting practices as double entry bookkeeping and the accrual basis only become effective in 1993. Just imagine. Okay, so how different in China and in for example, UK or US. Okay. Okay. Another impact of diversity in international accounting to the financial statement analysis is the Okay, another impact is the differences in corporate transparency make it difficult. So because the differences or the diversity in the international accounting, some country the transparency of corporate is, we said, very high. For example, if you are talking about developed country like US, UK, you can read a lot of information in the annual report. You compare to the with the developing country or with the emerging economic country, which the information is not fully transparent. Okay, so it will make it difficult to comprehend what measurement rules are being followed by the company. It's also difficult to estimate future performance metric and to value the forecast numbers. Okay. Another impact can be seen due to the auditing differences. Yeah. So for example, just now when we are talking about China, the formation of audit is totally new in China. Yeah, but we didn't want to discuss about some which is the differences is so huge. Okay, so what is happened is the auditing difference actually will affect the credibility of reported numbers owing to difference. So the difference can be seen in the information contents, yeah, the source of auditing standard itself, the enforcement of auditing standard, yeah, auditor liability to the third parties, auditor qualification, auditor certificate procedure, and auditor independence. Okay, so Exhibit 9.8, if you look, so this is the reporting in the UK. Yeah, so if you can compare with the reporting, the audit report in Malaysia, it's totally a little bit different. Okay, so for example, if you look in 99.9 exhibit, this exhibit is actually more focused on the wording used by the auditor. So if you look 9.9, there are one UK, US, Sweden, Switzerland, and Norway. So we said the wording of auditor opinions selected randomly from this company. So this exhibit is actually suggests that actual audit opinion very often exceed reporting minima prescribed by statute. In documenting the diversity of audit opinion internationally, yes, so Exhibit 9, this exhibit is also raises information used for analysis. UK auditor, for example, if you look, the auditor state the financial statement they audit give a true and fair view of company affair. So if you use this sentence, does the term true mean the truth, the whole truth, and nothing but truth? Does inclusion of the term of fair imply that the truth has somehow been compromised? And if you look at the US auditor take less obstinate stance and state that the audited statement. Okay, so if you look here, UK, they use true and fair. True and fair. But in US, they only use the above present fairly. It didn't use the emphasis of words. It's totally different. Okay. The US said present fairly and in accordance with a set of US measurement rules. And the same again, does this wording connote the same meaning as true and fair? Okay, and if we look the Swedish, it said here for the Swedish opinion is more informative than the requirements set forth in 9.8, where Swedish auditor are allowed to opine to nothing. Yeah, they can give no opinion. Yeah. However, in Swedish GAAP and annual account, yeah, when we said this is the in the Audit Act of the Swedish, it said They can opine to nothing, means they can give no opinion. But is this Swedish GAAP and the Annual Accounts Act, okay, is this we said synonymous, okay, either synonymous or it's contradict each other, okay. So this is the example. If you look, the use of word itself is different between few countries. Of course, Malaysia, we use the true and fair. Okay. Okay, so that's the end of part 1. We will continue the topic to the part 2 later on.